Hey guys, we're back for another video. I'm here with my cousin Drew Nichols out in California. I'm Derek Wilkins. Today, we're going to welcome in the new year 2026 with a kind of retirement planning reminder that it's always a good time to plan for your future. Even if you're in your 40s, 50s, early 60s, it's never too soon to start planning for retirement. And the holidays, Drew, it's a time to get together with your grandmother, your aunts, uncles, your parents. And I don't know about you, but like over the holidays, I saw a lot of relatives and they're starting to age. And I'm starting to see that a lot of them are getting to the point where they're going to need more and more long-term care. And it was just a reminder that we want to put out for our viewers and on YouTube that you got to plan now because it's too late to plan once something happens. So Drew, not to take up the whole first couple of minutes, but how's it going out in California and what'd you see?
Yeah, my mom's in South Carolina, and luckily she's healthy as a horse, and she watches most of our YouTube videos. Hey, mom. But she had a little situation pop up where she got some cataract surgery, and thankfully, thank God, everything worked out for her. But there was a little complication around Thanksgiving. She was supposed to drive from South Carolina down to Florida to go visit her siblings, and she was having a problem with her eye, like getting real dry and having minor vision problems. And I said, Mom, I know you want to go see your brother. He's unfortunately on his deathbed. He ended up passing away in late November, but it's not safe for you or really for anyone else on the road if you might have a problem with your eye and swerve off the road. So I jumped on a plane with my two daughters, 8 and 10 years old, and we did an impromptu Thanksgiving at grandmother's house. And it's just those kinds of things, just little things that we all have to deal with, whether you're next door to your parents or across the country like I am from your parents. Dealing with aging parents and your own kids and everything is just a lot to balance, isn't it?
Yeah, it really is. And it's going to happen to all of us. I don't feel like I'm 50 now, and I don't feel like I did when I was 25. And the next 25 years are probably going to accelerate the aging process that much more. And as we all slow down, that's going to happen. You know, that we can't change that, but what we can do is prepare a financial plan to where it can put you in as a comfortable situation as possible. And that's where planning for things like long-term care, like what happens if you fall and break your hip, if one of your spouse develops dementia, Alzheimer's, you want to have some money coming in that's not really hurting you financially and draining your assets and draining that nest egg that you work so hard. And just some simple solutions that done before the problem happens can just make your retirement that much more enjoyable.
Yeah. And as a kid of a parent who, again, thank God mom's healthy as can possibly be, we've had a few little bumps in the road. And it's always nice to know in the back of my mind when things kind of start going a little south. Luckily, everything is always course corrected back to the health side. But it's so nice as a kid to know that we've got a long-term care plan if we need to activate it. So let me walk you through. A lot of people watching this have probably dealt with this themselves, but if you haven't, it's like you end up in a hospital room with your parent and there's some sort of health situation going on. And you have all these thoughts racing through your mind. Like one of them is, how am I going to deal with this emotionally? How am I going to deal with this physically? How am I going to have to live with my parents? Are they going to live with us? How are we going to pay for all this? And the pay part is the one thing that gets taken off your plate by one of these policies. It's why I'm such a big advocate for having something. We don't have a huge policy for mom. We have a small policy, but just Derek, you've dealt with it. You've actually made claims on one of these plans.
Yeah. So yeah, my mom, she was one of my first customers when I got in business in 1999, and she had a botched knee surgery, or I'm sorry, knee replacement surgery, fell, tore all sorts of knee ligaments. 13 surgeries later, she didn't get out of the wheelchair, and she needed care for about 13 years off and on, believe it or not. In the last 3 years, we're in an assisted living facility. And Drew, I don't know if you remember this, but like our family has had some unusual things happen. Like with Drew and I were cousins, and our grandmother, this probably had to have been maybe 30 years ago, but grandpa was dropping, they're going to go visit somebody at a hospital. And grandpa, just being the old school gentleman he dropped grandma off the front door and he went around to park. But when she shut the door, she had a nylon jacket on, and that little string that ties it up at the end got caught in the door. My grandfather was probably 90 at the time, and he couldn't hear that. He ended up dragging my grandma probably 30, 40 yards in the parking lot. And she went from being very active, very mentally with it, to really never recovering from that. So just freak accidents can happen when you least expect it. Do you remember that story, Drew?
I remember that story every time somebody gets out of my car.
Yeah.
It's those kinds of things that stick with you. Yeah. And grandmother Juanita never was exactly fully recovered from that. Although, considering she was in her 80s, that would have killed a lot of people, probably from a heart attack. So the fact that
Yeah.
she
She was
recovered and was out of the
tough.
hospital
Yeah.
after what, 10 days was
Yeah,
pretty
yeah,
impressive.
no, she was tough. But I remember mentally, because she probably was jostled around, her head, concussions, and all sorts
Oh
of
my
stuff.
gosh.
She
Yeah.
was never with the same mentally, and it's just sad. And my grandfather it really, he's beating himself up for it, but it was just an accident that happened. Yeah, his point is, we've seen like freak things happen, and it's one of those things where you're spending pennies to protect dollars. And so whether you get long-term care insurance or hybrid long-term care insurance, or there's some of these hybrid long-term care annuities, that's a self-insure play. With interest rates being so high right now, there's really some compelling interest rates out there, to where if you're concerned about it, but you're not too concerned, you can just simply use a portion of your bond fund. Don't touch your stocks, because we love the stock market. Use a portion of those bond fund portfolio and allocate it towards some of these long-term care index annuities, and you can solve the problems with that too.
Yeah. Or if you're in your 50s or 60s and you've got most of your money in the stock market, here every single day we're hitting an all-time high. Hopefully that's going to continue, but take a few chips off the table, put them in a small portion of those chips, put them in some sort of hedge, which is what we provide. Hey, another story, like another family
Yeah, let's
story
hear it.
that I wanted to go back to, because when our grandparents both passed away, our grandfather was actually the last to die. We are one of those families that was fortunate enough that our grandparents, they had a fair amount of land. And a lot of people I talk to in long-term care planning come from a background where they may have a small farm or even a large plot of land, but inevitably a couple of their kids have moved away, kind of like in our family. Like my dad and your mom both moved to the city,
Yeah.
and then two of their siblings stayed in the country near the farm. One thing that I was talking to a lady today about this, interesting, she said, I want to buy one of these policies so that if we die, we can leave something to our kids who didn't hang around, a financial gift, an inheritance, and then be able to leave the land to the kids who did hang around, give them the farm, but still have something to give to the kids who are out of town. And I was like, wow, that sounds exactly like our family and what happened with us. And it got a little contentious. Remember that?
Yeah, no, I do remember that. Yeah, it's almost one of those things where the parents that or the kids that do stay near the parents, they see them more. It's more, maybe they help out more, so they feel like they're more entitled to more of the nest egg, for good reasons. I'm not arguing with that. But at the same time, the parents are situated where they've always divided stuff up equally with the kids their whole lives. So it's a tough situation. And having this little chunk of money that, if you don't end up using your policy or your annuity doubles or triples in 20, 30 years, you can leave that money to one of your kids, maybe the kids that left, and leave the land to the kids that are the farmers and kept the farm in the family.
Yeah, I think more people need to think about, we live in this whole society of it's all about me, and people have bumper stickers that say I'm spending my kids' inheritance. And they're
Yeah.
sure you earned it, it's yours, you can do whatever you want with it. But inheritance is actually biblical, Old Testament and New Testament. I don't want to go too deep down that road, but it
Tell
can
us about
really
it.
help.
I think we should. So tell us the biblical angle.
It goes, there's countless Bible verses that encourage leaving inheritance to the next generation.
Mm.
It's probably a good way to practice self-discipline and finances, which is what a lot of Christianity is all about anyway. To me, it can be very helpful to the next generation if you can leave them a little something. Obviously, we don't want to leave trust fund kids. Those don't, they all turn out addicted to drugs. We're not talking about that.
Yeah, and it's, I guess, if like you've probably heard the thing, I want my last check to bounce. That's like a somewhat a selfish way to think, because in doing so, that person that says that, they're forgetting that their parents, their grandparents, their great grandparents, they didn't do that. And so
Yeah, it's
they
a
did
great
kind of
point.
leave a legacy of money or family ethics or house or land or something that kind of got them there. So if they do blow it, there's no tomorrow. That's going against what got them in that fortunate financial situation.
I wonder if the type of people that have that bumper sticker were like self-made, like Steve Jobs was adopted and came from adoption all the way to one of the richest people in the world.
Yeah.
Maybe it's mental there. I think you're right. We should look back to the past and honor the future. Obviously, there's a lot of ways to do that through self-discipline, through good investments, and to the point of what we talk about all the time, just some solid planning, just some realistic planning.
Yeah, and I think going back to what you said about, yeah, you could spend the money and go buy the Ferrari and spend every dime you had, but is that really the right thing to do? Do you really want to do that? It's like the excess. I think probably the biblical verses, you probably know them better than I do, but they probably talk about that, just maybe some control and self-discipline, like you said, and not making those irrational purchases just because you can, and maybe setting it up for your kids.
And if you don't like your kids, maybe you like your grandkids, because the proverb says a good man leaves inheritance to his kids. So, I mean, I've got 4, you've got 3. I love all of mine, but who knows what the future may bring?
Yeah, exactly. Just to not labor this point, but I know for our grandparents, I think Drew and I, our families, our parents were certainly not wealthy by any stretch. I'd say maybe lower middle class. But I know our grandparents would give us a little bit of Christmas money every year. And it wasn't a whole lot of money, but there's one year that I used some money to go buy my first computer. And without that money and buying that $1,000 to buy my first computer, would I be where I am right now? So that was just an example of a small little gift that my grandparents left to the grandkids that kind of seeded what Drew and I are doing right now.
And I'm guessing you bought that computer so that you could start working on spreadsheets and not play games.
Exactly. It definitely wasn't a gaming computer. It was just, I was in college. I didn't even have a computer. I was kind of late to the game, but I heard people talking about it. So I was like, maybe I need to get one and figure it out. And then lo and behold, and then once you graduated, you helped me get the LTC tree up and running. In 2004, I think, is when we bought that domain name.
Yeah, I was actually looking. I still remember getting the little First Citizens Bank of South Carolina, the little white jacket with a little bit of cash. Not a huge sum. We weren't, certainly, like you say, not super rich, but it's something that as I get into my late 40s and headed to 50s, I'm starting to think about, how can I set up a legacy for my kids without spoiling them?
It's exactly.
Give them a little something.
The audience just heard I had one of my little 18-month-old daughter try to peek in here and did a little screech. So yeah. We got little kids running around this house.
Okay, so it's January 15th when we're recording this, 2026, and we're just doing our New Year's show. And that's because nobody wants to think about long-term care ever, but especially the first couple of weeks of the new year. But it's a good thing to do a plan for. Don't overthink it. Don't get paralysis through analysis, and don't overbuy. That's our big thing. You and I both have relatively modest policies for our parents. We're not huge insurance fans.
Yeah, exactly. And we practice what we preach. We want you to buy as little insurance as possible. I promise you that. In doing so, you're going to hedge the majority of your risk, but not overdo it, because most of our clients have other assets elsewhere. So it's really a diversification play. So we'll guide you on which company has the lowest rates and gives you the most benefit. And, and so if you'd like to learn more about whether it's long-term care insurance, where it's annuities, where it's how to set up a lifetime income stream that's going to pay you X number of dollars for as long as you live, which will have a long-term care doubler on there, or hybrid long-term care insurance, give us a call. We usually pick up the phone. If you don't pick up the phone, leave a message. We'll call you back usually in 5 minutes, or go to ltctree.com, request a quote. You can enter your information there too. And Drew, I think you said you have another website set up too for somebody who wants to pre-qualify with a health quiz. What's that URL again?
Yeah, so we built a website that you can completely anonymously spend just a minute or two, tap in a couple quick questions to figure out whether you qualify for one of these plans, because about 35 to 40% of the applications that Derek and I submit get declined. And that's after we thought it was a good, clean application. For that first screen, even 40% get through us. So you know your health better than anybody. All you have to do is go through and answer these anonymous questions, and you can figure out whether you qualify. The website is quiz.ltctree.com. We'll put that on the video, put a link in the show notes. But if you're just listening to this, it's just quiz.ltctree.com.
All right. Thanks, guys, for watching. We'll be back soon for another one.